Welcome back. Joining us on the show now is Kunal Shah. He's head of commodities and currencies at Nirmal Bank. Kunal, hi, thank you for joining us. Starting with gold first, and the overnight gains have been something to write home about. I mean, we've seen a low of around 1880 in the last 1 week itself, and we are back at 1920. So a good $40 of a jump up coming in. Would you say it is an oversold position that is looking at being covered on, or do you think this run up is sustainable?
I think whatever downside we saw in gold was mainly due to the way the US treasuries and globally the way the bond yields have surged and the way the dollar index have strengthened. That has led to correction in gold prices. The fundamentals of gold are very strong, and we believe that gold prices are going to go up significantly higher. It is at the cusp of a major breakout going forward, and I foresee going forward next 2 to 3 years, or perhaps 3 to 5 years, this bull run will continue. It is about to leave the base of this $1,800 to $2,000, and it is likely that it is going to go into the trajectory of $2,500, $2,600 in next 1.5 to 2 years. So we are going to enter in a major bull run in gold going forward. The monetary base of the central banks have exponentially expanded over the last 3-4 years. And they are not going to go back to the previous basis. And accordingly, gold prices are highly undervalued. And it is just a matter of time before it shoots up.
Kunal, you spoke rightly about the range, because when you look at the quarterly range that gold seems to be making now, seems to be getting broader and broader. I mean, we've seen 2,000 and we've seen 1,800 as well, and we've seen levels beyond that below that too. What is your sense on what kind of range could we be working with for this quarter or for the rest of 2023?
Yeah, so for rest of this year, 1850 should not be breached on the spot gold. And on the upside, I foresee 2100 are kind of levels which we are going to see during 2023. And next year, that is 2024, we are going to see gold shooting up and testing $2,500 conservatively.
And an even smarter rebound is what we've seen in case of silver overnight. We are back around $24 an ounce. What's your sense on this one?
Extremely bullish. It's anyone wants to diversify into commodities, silver is one of the best option right now fundamentally in metal space. The annual consumption this year for silver is going to be roughly 1,285 million ounce. The primary supply is going to be somewhere between 885 to 900 million tons. Scrap will be around 200 million ounce. So on and all, there will be a deficit of 300 million ounce of silver in the year 2023, by the end of 2023. So last year, this deficit was roughly around 225 million ounce. This year, this will be 300 million ounce. It is heading to 85,000 rupees, 90,000 rupees on Indian bourses. It's the must-have in the portfolio of the precious metals. So out of in all precious metal, platinum, palladium, gold, and silver, I personally recommend, silver will be the best bet for the year 2023 and 2024.
Anything in the industrial metals that you think also is worth having in portfolio?
I think most in industrial metals, the inventory side and the supply side, and considering the way the EV markets are expanding across the globe, copper seems to be my favorite one. And I don't expect any major upside this year, maybe perhaps next year, but copper seems to be my favorite one. Around 710, 715 are the levels where copper should be, long position should be initiated in copper.
Okay, all right, Kunal, as well as Manisha, thanks very much for joining in and taking us through the commodity space. Well, for the